This is Autoline Daily, the show dedicated to enthusiasts of the global automotive industry. The attack by extreme environmentalists that shut down Tesla Berlin is going to take a bit longer to fix than originally expected. Tesla says the plant will be shut down at least until the end of next week. That means the plant will lose at least 2 weeks of production, which would equate to about 12,000 vehicles. We estimate that represents lost revenue of about $600 million. Tesla might be able to make up some of that lost production with overtime, but the plant was already running flat out, so it could take many months to make up for that lost production. Japanese automakers have benefited greatly from the weak yen over the last few years, but the days of easy money may be about to start fading away. The Bank of Japan is considering raising interest rates from their extremely low levels. Get this, a 10-year bond yield is at 0%, and short-term interest rates are actually negative, which means the bank pays you to borrow money. Since it made no sense to invest in the yen, it plummeted in value. Over the last 4 years, it fell 30% against the dollar, and that weak yen helped Japanese automakers export cars at lower prices, and it bolstered their bottom lines thanks to extremely favorable foreign exchange rates. But even just a hint that the Bank of Japan might raise interest rates spooked the stock markets. Toyota's stock dropped almost 3% on the news. Honda dropped almost 4%. Nissan was down 5.6%, and Mazda was down more than 6%. That's quite an impact, and it shows just how much investors are worried about a stronger yen hurting the car companies. There's so much focus on all the automotive investment pouring into Mexico that everyone's missing out how much investment is also pouring into Brazil. General Motors, Toyota, Volkswagen, Hyundai, and Stellantis are making mega investments in the country. GM will invest $1.4 billion. Toyota's good for $2.2 billion. VW is going in with $1.8 billion. Hyundai will spend over $1 billion, and Stellantis will plunk down more than $6 billion over the next 5 years. Altogether, that's well over $12 billion. Brazil initiated a new decarbonization program called Mover, and the automakers are reacting to that plan. Some of that investment will go into making electric cars, but since more than 80% of the vehicles sold in Brazil run on ethanol, most of it will go into making what are called biohybrids, or hybrids that run on ethanol.
We want to know what drives your testing. OTA, connected car, diagnostics, remote testing. Intrepid Control Systems is here to help you work from anywhere. Intrepid Control Systems, driven by your data.
For the first time ever, the military product arm of General Motors sent a vehicle to the summer trials in the United Arab Emirates, which is a pretty demanding on- and off-road test. The Infantry Squad Vehicle, or ISV, from GM Defense had to travel nearly 2,000 kilometers or over 1,200 miles across highways, sand dunes, and rocky trails, sometimes loaded to its maximum payload. But it was able to finish and received its certification of completion, which is one of the steps required to see if the ISV can meet the technical and tactical needs of UAE armed forces and other regional countries. Just over a year ago, GM Defense signed a cooperation agreement with an entity of the UAE government to eventually deliver solutions to military, security, and government customers from the region. And this is part of GM's larger goal to see if its defense unit can generate $1 billion a year in revenue by the end of the decade. Volvo Trucks dominates the electric heavy-duty segment in Europe. It ended last year with a nearly 50% share of the market, and total sales were up 256%. But it's not as impressive as you might think. Volvo Trucks doesn't give the exact number of electric heavy-duty trucks it sold in Europe. However, it does give its global sales number, which was 1,977 units in 2023. So that means, with some number less than 1,977, Volvo Trucks was able to claim nearly half of the EV heavy-duty truck segment in Europe. By comparison, it sold over 143,400 gas and diesel trucks globally last year. Automakers are saying that the public has to be on board with any drunk driving detection technology that's mandated, or it's going to fail. The Alliance for Automotive Innovation, a lobbying group that represents most automakers in the U.S., told NHTSA that technology in cars that can detect drunk drivers, quote, becomes a moot point if it's not accompanied with public awareness and acceptance. The infrastructure law from 2021 mandated that NHTSA must issue a final rule by the middle of November to require that new vehicles must be equipped with technology to prevent drunk people from driving. NHTSA is still trying to figure out what the standards will be. Once it issues the final rule, it has to be standard equipment in all new passenger vehicles by 2027. But the suppliers who are developing the technology told Autoline they're skeptical it will be ready by then. Rivian is cutting the third shift at its plant in Normal, Illinois, but it's not laying off any of the about 8,000 people it has at the plant. Rivian is shutting down the facility next week to retool it for greater efficiency and lower cost. And with that greater efficiency, it says it doesn't need the third shift. Even so, Rivian said that production at the plant will remain flat this year, and it only expects to build 57,000 vehicles. Tesla is dipping its toes into the commercial side of the business with its passenger EVs. It developed a two-seat version of the Model Y for France that has over 2,100 liters, or about 76 cubic feet of cargo space, and 565 kilometers of range, which is about 30 kilometers, or over 18 miles of range more than versions with the second row. In France, commercial vehicles with 2 or 3 seats don't have to pay the vehicle tax, which is 20%. Where it can, Tesla has already started replacing Chevy and Mercedes mobile service vans with its own models, so we could probably see similar vehicle upgrades in France. In other Tesla news, it's offering a bunch of free Supercharger miles to anyone in the U.S. who trades in a vehicle to lease or buy a new Tesla before the end of the quarter in March. Those that lease will get 5,000 free Supercharger miles, and it's double that, or 10,000 miles, for those that buy. We typically see a significant bump in Tesla sales at the end of every quarter, and one way it does that is with incentives like these. Chinese automakers continue to expand globally. Great Wall Motor is jumping into the luxury SUV segment in South Africa with a model called the Tank 300, becoming the first Chinese automaker to sell a luxury SUV in the country. But Great Wall is no stranger to South Africa. It's been selling vehicles there for 17 years. And that brings us to the end of today's show. But don't forget to tune in to Autoline After Hours at 3 p.m. Eastern Time today to see if John and his guests can't figure out this affordability problem for automakers. Thanks, and I hope to see you there.
Autoline Daily is brought to you by Bridgestone, solutions for your journey, and by Intrepid Control Systems, over-the-air engineering. Boost your game.